Well, good morning, everybody. This is going to be the watch list for Monday, January 29th, and I'm going to start out by looking at the two indexes, the Qs and SPY. So first and foremost, let's look at the triple Qs. One, watch the volume has moved up over these prior 4 days, pushing us into new all-time highs, and then we have started to back down. So I'm not going to annotate anything on this chart. What I would do is I would watch for a slight pullback. We'd love to see a retest back here of 412. I know that is quite a drop to the downside, but if we could get that and then push higher, I think that will be ideal. So what's going to precipitate a move back down? There are a lot of tech earnings that are going to be coming out this week and next week. Google, Microsoft, Apple, everything tech is going to be announcing. So we'll want to watch for any weakness or strength going into the month of February. I do want to start out also by looking at the SPY. So let's take a look at that. Something a little different here is we're seeing a little bit of divergence, right? Where we saw some weakness in the Qs, we're not exactly seeing that in SPY. So for the most part, I will trade between SPY and QQQ depending upon which one is stronger on the day or which one is weaker on the day. So the stronger one, I'll always play calls. On the weaker one, I will always play puts. Are we going to get a pullback? I don't know. If I was going to look for a pullback, it would be probably somewhere in this range of 478. Again, not unlikely that we'll get a pullback, and a lot of it is going to be dependent upon earnings. So just be very mindful to check marketwatch.com every morning before you start trading to see, are there any news events? Is there CPI, PPI, FOMC minutes coming out? Unemployment, housing starts. The big major announcements are what will literally move the markets intraday. So watch for maybe a slight pullback and then a push higher if this rally is going to continue. I want to take a look at a couple of individual names. So the one that is underperforming the tech sector is going to be Amazon. So we're going to pull out here to a daily chart of Amazon, and you will see that while Meta, Google, Apple is approaching all-time highs, this could be your potential catch-up trade, right? So let's see where it rejected. It rejected off of this double top here at about 188, which is still a nice move up. We did clear the prior hurdle marker, which was right about here. So it rejected at 145, came down, touched 145 again, failed, came back up, and now it's using it as support. So where would be the next level that I would like to see hold? Well, it's going to be on this pivot right here, which we are now holding. If we could get strength here on Monday and Tuesday going throughout the week, I think you target your next pivot up here around 169, 170. So that would be a great area to actually go long. Wouldn't short the stock, doesn't make sense. You're above the 50, you're above the 21, you're above the 9 EMA. So this chart is still looking bullish until you get a breakdown. Volume is holding steady, gradually moving up. So possibly watch for some calls in Amazon. The next one that I want to go ahead and take a look at is going to be Broadcom. Now this one's going to be expensive. So I think what you do here is this might be an opportunity for you to get long. It's trading at $1,200 a share. It was as high as almost $1,300. But let's watch a reverse fib level to see where might this thing bounce. So what I'm going to do is I'm going to go from a pivot low to a pivot high. And watch for an opportunity for this to pull back at about 1163 and then consider some calls going long. Now, the interesting thing here is we are still above the 9, we're above the 21, and we are above the 50, but we are starting to roll over. So if I was going to look for a price point for this to come down to, I would say 1163. I probably would not buy puts to this level because they're going to be so expensive. And you're going to have more opportunity if the volume swings to the upside. Now, mind you, there's also a pivot right about here, right? So this is where we were consolidating for a couple days before we broke lower. Then we broke above it, moved up. So you want to be very cognizant of this area of confluence, right? Right around here, you want to see, is there interest in buyers stepping in to push this back higher? If not, and if it's going to break lower on overall earnings from the tech sector, I would presume that the first thing you would want to look for is going to be this gap fill right below, which isn't that far off. Here we go, right here, at about 1154, 1155 down to 1145. And then if we break lower there, there's another little tiny gap right here, which is just a hair lower at 1120. And then I think we will probably come down to where we found really good support before we pushed higher at 1041. Again, these options are going to be very expensive, but what it's good to do is to learn how the stock is going to behave in what I'm going to call is an area of interest. So that's going to be Broadcom for you. A couple other ones I want to watch is going to be General Motors. Interestingly, GM and Ford and Tesla have all, had some really challenging downgrades, earnings misses, so on and so forth. But if you'll notice here with GM, it's literally kind of holding and trading within a range, which is what we like to see before we start to build some overall momentum, right? So we go up to the top of the channel, we come to the bottom of the channel, we go to the top of the channel, we hold support at the bottom of the channel, move midstream, and then here we are again. So two things. One, if you're going to go long on this, I would want to wait for it to get back above 36.72 to push higher back up into the $40 range. So target somewhere between $40 and maybe $41 for a long play. If we fall to the downside, then that's where it gets a little dangerous because you have two things. One, you have the gap fill right below. So I would wait for the gap fill to fill before it breaks going lower. And then there is another huge gap down here that will also act like a magnet back to 31. So for strength, wait till you break above the line. For weakness, wait till the gap fill occurs. By that point in time, you will be below the 9, the 21, and then this 50 is going to come up into the gap fill area. We fail that, and then we're probably heading lower. So two strategies to play GM. Keep an eye on that. The next one that's going to be announcing earnings is going to be Starbucks. Starbucks has had a ton of volatility. I did a post about this, it was on my watch list, and I think I even did a LinkedIn post that said, I think this thing's coming back down to 90, and I posted that when it was up at 100. Well, we're currently sitting at $92, but we are also at an area that has some pretty good support. So the question will become, will it hold? So let's take a look and say, why do I think that? Well, look all the way back here to the left, and you'll see that we rejected off, and then we literally kind of just stay in this zone right here. So this is a pivotal point that if Starbucks should drop below this zone here of where the buyers are at, we're probably going to go back and test some of these lows down to the next price level where there is clearly support. So you can see that there was support here. It held, and this is the daily chart, and it keeps holding. So I would anticipate that if you break right here at 89.21, or you break that $90 level, which is going to be psychological, you're going to start pushing down into the 85, 83 range. Now note that this level here, right here at 89.21, also lines up back here in November of 22, that same support level. So we bounced up, had all this activity, kind of like your head and shoulders, back to the downside. We move up. Now we're back in this range again. So you want to see if buyers are going to hold. If not, we're going lower. Next one I just want to look at real quickly is going to be ExxonMobil. So the energy stocks have definitely sat out this rally. But over the last couple of days, they've started to really gain some momentum. I took a long position in ExxonMobil, and the rationale for that was a couple-fold. One, it was definitely way oversold. Two, they have a really good dividend. And three, they're going to be announcing earnings. So they got an earnings announcement coming up here on Friday, February second, and I think they're going to be decent. There's also been some news, a lot of upgrades when you see a stock get upgraded or downgraded, but I think oil has potential to the upside. Why? Because they can still be profitable with oil being as low as $50 a barrel. Right now it's trading at around 70, give or take. So let's look and see where we were at before. So before we broke down, this is going back to March of last year. We held here at this level. We moved up. We never came down and touched it again until recently in the end of December. We bounced, whipped off of it, moved higher. We briefly fell below it. And now 1, 2, 3, 4 days, we are gaining momentum. And this is great news, right? 1, 2, 3, 4, 5, 6 continuous days of the buyers stepping in. So, would I get long right now? No, I got long back here at the consolidation where we were holding quite nicely. So I got in at the, $97 range. I'm now at 103. So what do I want to watch a break? Well, your next level where you're going to probably hit a little bit of overall resistance is going to be right about here. And why I say that is that if you look at this range right here, it was consolidating, break below, tried to push through it. Nope, couldn't do it. Tried to push below, up through it again. Nope, couldn't do it. Now we're going to make a third attempt. So if we're going to go for another attempt, I would want to wait to get long until I could get about above 104.50. And then what would I target? I would target, where is the next level of resistance going to be? And that's going to be up here, right here in this range. And so I think we got some room for a good move up, maybe to 110. And then if we move up from there, I think we got some opportunity all the way up into this 113, 114 range. So use the overall supply, which is your resistance, as your base. Let it break above, come down, retest, build some stability, and then it will make a run for the next area of liquidity. We call this liquidity because you had a change in direction of price, right? We come up, we reject. We come up, we reject. We consolidate, we reject. We come up, reject, come down, reject again. We're coming up. So we'll want to watch. Do we hold this, hold and break above, or do we start to break to the downside? My take is with earnings coming up, you're going to have some momentum and people are going to step in with tech being overbought, and they're going to want to get into some of the energy trades and the healthcare trades, which have literally underperformed. So with that, those are the stocks that I'm watching for this upcoming week. Hopefully you found this beneficial. And if you would, just like the video, drop a comment. And as always, send me any questions you have at options@billfanter.com. And I will talk to you all as the week progresses. Have a great day, everybody. Take care.